Hey, everybody. Welcome to Code and Capital, a new podcast from Benzinga focused on emerging tech and fintech. I'm excited to be joined here by Charles Birnbaum, a partner at Bessemer Venture Partners. He has a very prolific fintech investing background, including companies like Alloy, Lithic, and Melio Payments. Also a very big Knicks fan. So, Charles, great to have you today.
It's a suffering Knicks fan. Hopefully brighter days ahead, but yeah,
We will have a question on basketball at the end, so
sounds good. Yeah.
we'll keep the audience waiting on your perspective there.
Good to
But
see you, Ian, as
yeah,
always. Yeah.
good to see you too. Um, Before we get started, let's talk a little bit about your career background and how you got into fintech. I think a lot of folks, actually including myself, I don't think I know the full story. Would be really interested to hear how you sort of got into the space.
Yeah. Started my career in years ago in capital markets. So it's kind of started in on trading desks and kind of covering the tech, media, telecom sector back in the day, kind of before the financial crisis, and then kind of during the financial crisis, I escaped to business school and ended up in the startup world. I was an early employee at a company called Foursquare here in New York when kind of it was pre everything, and that was a great experience and ride. And I ended up getting recruited to Bessemer Venture Partners um, at that point in my career when I had done those two things, and I really stumbled into fintech. My mentor, who had hired me at the time, his name was Rob Davis, and he was investing in innovative financial services businesses long before fintech was even a thing, or a category that VCs were really interested in. It was just his personal background. And we had been early investors in very early fintech leaders like Gerson Lehrman Group and Betterment and Zopa in the UK. So just got to learn from him and some of our early investments in the space, and then the fintech market has really blown up in my 12 years in venture capital. So it was very much right place, right time, and I'm sure you know better than anybody. Like the deeper you go on any subset within fintech, whether it's payments, um, the insurance value chain, bank software. I mean, you could go on and on and on, and you uncover kind of markets that seem niche that are actually massive. Software companies that you've never heard of that actually are quite large, and it's been a journey over the past decade trying to get smart on all these spaces, and now I know a little bit.
Yeah, I totally hear you. I compared to a lot to that famous iceberg picture where like only a little bit is peeking out above the ocean, and like underneath the ocean is a massive iceberg. And I think
Never ending. Yeah.
any particular sector of fintech, all like they're all the same in that regard. Bessemer is really known for its thesis-driven investing approach. I think that's a really great and unique way of approaching investments. How does that play out for you in practice? Do you develop, fintech roadmaps and ideas, and then find specific startups, or is it a bit more opportunistic than that? I'd also love to hear a little bit more about the current theses that you're developing out and what your thoughts are about the space
Mhm.
now.
Yeah, I mean, we definitely are thesis driven. I think it's kind of the only way to do it, just because you can't boil the ocean. There's so many different places to look, and I think it's a little bit of just a focusing mechanism. There's so many great things always happening, and I think to develop conviction and point of view, you just have to go deep in certain areas. You can't do everything. Um, so I think what we do is, we have like long standing roadmaps that are what I'd say like decade long roadmaps where you're honing and always open to meeting new entrepreneurs. And yeah, our wealth management roadmap would be an example. I mean, starting with things like Betterment, United Capital back in the day, and more recently, emerging companies like Farther and Upvest in our portfolio that came from some of the learnings from a decade ago, and just being kind of having a prepared mind, but these are like living and breathing presentations that we do internally, and kind of like a McKinsey style process of, why now, why is this interesting, what are we not looking for, what are we looking for, and it just has you ready, because when you're making early stage investments that are going to take a decade to play out, like I think you just want to be um, prepared with some of the industry conversations, like talking to the incumbents, kind of being ready to know what you're getting into. And that's what we call them roadmaps, and that's what roadmaps are. And sometimes they're really specific. Like we'll talk, I'm sure, about stablecoins and what's happening with stablecoin infrastructure and their impact on cross-border payments and some other elements of the payment ecosystem. That's something we've been studying for a while, and the entrepreneurs lead you to the water, right? Like that was not something, like, not an idea we came up with. It's like you just see a lot of activity there. Um, and you wait for things to actually change in the market, and then you start putting pen to paper. It's after talking to lots and lots of people. It's more like investigative journalism, like what you do, than anything else. And then just meeting with the actual entrepreneurs and developing your own flavor of a point of view. And that's how early stage investments happen. So yeah, and we have it in cybersecurity and in healthcare, both on the software side and life sciences. We have it in kind of deep tech and space and satellite technology. We have it in AI infrastructure. Like there's separate teams that are always going deep. Um, and then you can change your perspective. You could work on a roadmap for a couple years and not make any investments, and
Yeah.
say, I need a new one because I don't think there's anything here. So some of them are kind of mini roadmaps and they expand. Some of them you kill, and then some of them live for a long time, like our vertical SaaS roadmap, right? That was something that seemed contrarian when we started it, and then became something we kind of published and became somewhat canonical in the industry. Yeah.
Yeah, I mean, it's interesting. You sort of let the market play itself out. You let the entrepreneurs kinda come up with ideas, and then as the market develops, the thesis develops as well.
Yeah, I mean, it's all the entrepreneurs are always doing the work. We never pretend otherwise. We're not a shop that does a lot of incubations, or kind of creating the ideas and then finding the entrepreneurs. I mean, you want it to happen naturally, and almost always, if there's a good area of opportunity for entrepreneurs to attack with new technology shifts, there's going to be lots of teams doing it, and then you want to meet them all. And I always say it's like looking for an apartment, and it's like you want to look at every apartment in the neighborhood and figure out the one you want to live in because you're stuck with these. And we don't tend to invest in companies that compete with one another. So it's like that's really what road mapping is all about.
Public market and private markets are so fundamentally different. I mean, in so many different regards. As an investor, what are some evaluating factors that you take into account when looking at a potential investment in the private markets, especially with you guys focused on early stage?
Yeah. Well, I mean, look, I came from a capital markets, like taking companies public. I was on equity capital markets desks, and at that point, a team is so mature, and usually the public markets are mostly interacting with the CFO and of course, the C suite, the rest of the C suite initially, but then ongoing to the CFO and the investor relations team. Um, the team is everything always at every stage, but I think when you're an early stage private market investor, it's like 90% of it is the team. You have to do your diligence on the market, whether an idea makes sense for that market, whether or not there's kind of a why now and an opportunity to displace incumbents and all that work. And of course, like actual financial and customer diligence and legal diligence, there's work you have to do. But mostly what you're doing is trying to evaluate the team. We like to talk about founder market fit. Um, Whether or not like the team has the right capabilities to pull something off. Are they going to be the type of people that are going to be able to convince people to leave higher paying jobs to join them, to attack something? And in financial services and fintech, I think it's even more profound because usually you're pulling people away from high paying jobs, right? So when I see someone doing something disruptive in asset management, it's like it's much harder to build a team or real estate investments. These are people who are walking away from kind of large annual payouts to take a chance and believe in the equity of a fast growing startup and a founder. And like so, I think the team is even more important sometimes in financial services because the team has to be so impressive that almost like you would want to work with them and for them. So that's kind of the bar I think we try and keep. But I think that's the biggest difference because you're always thinking about macro trends and markets and unit economics of a business, but the team and making sure they're the best team in that space, and the one you think are going to execute and win over time. I think that's the biggest difference.
Yeah, and it's so subjective to underwrite the team versus, a bit more calculated when you're underwriting a business with a lot of metrics and
Yeah.
stuff like that.
You can do your work though. You can call people who've worked with those people, who've worked for those people,
Mhm.
and I think the back channel referencing is critical. Like we do as much diligence on the people as anything. Yeah.
Makes sense. Let's switch gears a little bit and talk a little bit more about the trends in the industry that you're seeing. Obviously, Gen AI is making a lot of waves in the overall VC market, and I think that we're just scratching the surface on the fintech ecosystem. What are you seeing there? And do you think it's taking Gen AI a bit longer to make an impact in financial services than other industries? Let's say even like things like law and healthcare, where even though it's regulated, they seem to have a very a lot of startup interest, and that's in those spaces.
Yeah, 100%. Again, financial services is a big, big word. Lots of different things roll up into the space. We're seeing a lot of fast movement in wealth management. There's a lot of manual workflows, a lot of documents, a lot of conversations with clients, a lot of things you can do with that data. So there's a lot of fast growing, early stage, kind of AI forward companies in the wealth management and RIA world at the moment. Um, Accounting is having a moment for sure. Accounting has not been the sexiest market for cloud software and SaaS. With the legacy players kind of hanging on to a lot of that market opportunity, but we're seeing the accounting workflow, and all of the opportunities in and around accounting to be another area of fast moving activity. So I think the incumbents in the accounting space, and in wealth management are going to have to move probably more quickly than others. But in bank software, credit, risk, insurance, some of the industries where there are cloud providers, they do a solid job, but not a magical job. I think the opportunity for now rests with them, in my opinion, on how quickly they move to either soak up early stage startups and push those through their large sales channel. It's hard to sell to banks. It's hard to sell to large insurers and brokers. So I think I'm seeing the go to market challenges are not going away for AI companies that sell into some of these verticals. So we're somewhat sober, but still excited. I mean, I just don't think it'll be explosive in the early first 3 years of a startup's journey, the same way we're seeing in some of these legal companies and healthcare companies like a bridge and even up in our portfolio that are growing really quickly in those two markets. I think there's some exciting things happening, but I would try to take a different lens and think about each one differently, right? Selling an AI solution to a internal compliance team where the promise is that you're going to take away all their jobs is a different sale than doing something net new that hasn't existed, like creating demand letters for personal injury attorneys, where there's no cloud software that you're replacing, right? So I think the most exciting AI opportunities right now are things that didn't exist before,
Almost like
not
creating a
kind
market
of,
from scratch.
yeah, like not better versions of things that the cloud's doing well, or okay. So I think that's something. So it's definitely happening, I think, more slowly in most of the verticals I cover and go deep in. But there is some exciting stuff, and I'm pretty excited about where it's all heading. And I think coming back to that founder market fit concept, I think it's even more important here because I think they're going to come up with those ideas when they really come from the industry or one of these industry software companies where they know that company is going to do well, but there's like an adjacent crazy opportunity that AI brings to the table. I think those are the things I'm really looking for. And I think the first wave of entrepreneurs were quick to move, and once OpenAI launched ChatGPT. ChatGPT out in the wild a couple years ago, there was this early wave of entrepreneurs, and I think there's going to be a second and third wave of people that, now that it's more mature, ready for prime time, there's a lot more around it. People are going to take that leap coming from the industry, and I think it's going to be pretty exciting.
Yeah, this is a great segue into a bunch of other questions that I have. Let's start off with compliance. I mean, you're an investor in Alloy, which is a leading KYC compliance platform. It's become an industry standard across fintech in general. They launched some AI products recently. How do you see AI improving or making an impact on the KYC and compliance side? And then maybe we can, use that as a way to talk about just selling into banks too.
Yeah. That space is really interesting because there's a lot of manual workflows. There's a lot of people, a lot of headcount. Obviously, fintech startups don't want to hire on that side of the house, and it's led to some problems. And a lot of those companies think that Alloy is, not a solution for them, and they should be using something like that to avoid some of the problems they've run into over the last few years. leading to some of the consent orders that we've read so much about across the industry, right? A lot of sponsor banks are now requiring that fintechs use Alloy, and there's a good reason for that, right? You can both make sure you're using best of breed data solutions to both let in the right people and maximize revenue, but obviously keep out bad actors. And it's not just at account opening; it's ongoing, right? There's transaction monitoring and ongoing fraud. It's not just when you're opening accounts, and then it ties into credit decisioning too, right? If you're tying the identity all the way through, you could be making good ongoing credit decisions as a financial institution. So, really excited. That company's been at it for a while. It was not an overnight success, but kind of rose above, in my opinion, a lot of the fray by kind of deep integrations. And I think there's network effects to having hundreds of clients that you're seeing fraud happening all over the industry, right? An unsecured consumer lender is going to have a different set of fraud than a challenger bank or a BNPL provider or a commercial lender. Like these are really different paradigms. But if you have several customers or even hundreds of customers in some of these areas, you can kind of see before many of the clients do something happening in their industry, and help them be protected. So I'm excited about where they sit, the network effects, but there's a lot of opportunity even outside of what they do. For they just launched some concepts around kind of actionable AI, like not just using AI to enhance your workflow, but actually take action and protect your business from fraud, and that's actually changing, like taking action and changing things. And I think in the world of kind of more generative software development, and obviously everyone's talking about vibe coding, but this is about putting kind of business line people in a position to actually make changes that are real time, which I think is going to be game changing in the fraud and compliance world, because sometimes you can identify problems, but then not actually make the change for a while, and you're kind of staying vulnerable for that time period. I think there's going to be a really exciting change in the industry where you're not only identifying these things, but you're changing a workflow or how a customer is allowed to get through a flow instantaneously. So I think that's the opportunity, and they're working on a lot of that stuff, as are some net new startups in the space. But there's so much to the regulatory compliance world. It's not a niche space; it's a huge space. I think people underestimate how big the risk and fraud and compliance market is. I think the public markets underestimate it, frankly. And my thesis has been that in the age of generative AI in the hands of fraudsters and increasing real-time payments globally, obviously in India and Brazil, it's already everything, but I think it'll come to the developed markets eventually, even though it's starting in the less developed markets. Fraud's going to go up big time. And it's going to change. It's going to be real time, not I can have 3 days to roll back an ACH. Like it's going to be a mess. So I think all the innovators in that space are really well positioned for the next 10 years.
That makes a lot of sense. I think it's really interesting to sort of see these compliance startups, also selling into banks, the relationship between fintech companies that have traditionally sold in a B2B relationship to banks, and now they're adding AI onto it as a different layer. What have you noticed about that sales process? You mentioned the go to market earlier, and I think Brad Gerstner at Altimeter talks a little bit about experimental recurring revenue versus annualized recurring revenue, and I want to get to a sense of, like, how sticky bank contracts around AI are, and maybe, whether that's still pretty early days and they're actually not sticky, behind the scenes.
It's still early days. I think a lot of these are glorified pilots. They're big, but they're glorified pilots. Like, it's important to test. And most of the banks and insurers are not touching the core parts of their business, right? The decisioning. We have a company in our portfolio, Sixfold AI, that's really, really doing AI for underwriting in the insurance world, starting with kind of commercial and specialty life. And they have a really powerful product, but a part of their value prop is giving you a system to allow your underwriters to harness the power of AI, but still not have it be a black box, and be able to show something to regulators, and to be able to have a track record for what your actions were and why you arrived at a decision, and not be this hallucinogenic process, right? So these industries are difficult to get to the core of their business and change via AI. Same with credit underwriting in the banking world. But on the edges, most of these banks have not adopted the cloud enough and are using humans to solve a lot of problems and RPO and PPOs to handle a lot of the mess that they've created over the last few decades. And I think some of the early interesting startups are kind of taking this like services mentality. We'll do something for you, and then we're going to use AI. We're not going to talk about that. We're going to just tell you we're going to do it more cheaply, faster, and with a better data interface for your team to know what's going on as your it's like third party, whether it's a TPA in the insurance claim world or a BPO handling mortgage servicing type workflow. I think there's a lot of that happening. I think that those companies are going to do well, but it's a very different profile. I think we're still wrapping our minds around how to value these businesses. How will they ultimately be valued? Because in the beginning, when you're putting money into an early stage startup, it's mostly about ownership and your risk appetite and how much capital they're going to burn. But I think the metric, like I think you have to throw some of the SaaS metrics out the window because it's a whole different ballgame. And there's still a human in the loop in most of these things. And really the underwriting you're doing as a private market investor in these businesses is like, can they do this without adding headcount? And most of these companies haven't proven that yet. So it's kind of a journey to actually generate margin. But long-winded answer. There's so many different things happening, but I think most of the fast-growing stuff is like, we'll do the work for you that somebody else is doing, and we'll do it better, more cheaply, faster. And those are the things growing the quickest in financial services.
Yeah, a little bit of, like, there's already this existing business, maybe they consult it out, uh, and they already have that, mindset of, like, "We're gonna use an external partner for this," leveraging the AI and making it faster, cheaper, less manual, maybe more automated and precise outputs and things like that. That's sort of the value add that's resonating.
Yeah, and there's ostensibly like the barriers to entry aren't the same as a classic enterprise software company. So I think it's more about speed, and then I think a lot of those entrepreneurs would tell you their advantage is going to be the data. Like if they can get there faster and have the data, then they can build new technology that others can't because you need the data to feed these LLMs. It's a fascinating. I mean, I've never been doing this is my 12th year in venture capital. I've never experienced a time like this. Um, just so many things changing all at once. It's really exciting, and I think some of the incumbents are really well positioned too. It's not just
Yeah.
like every incumbent is screwed. I think some incumbents have that data and are thoughtful and were very machine learning forward. And I think those machine learning teams are really capable of kind of transitioning to being AI teams because they're similar skill sets. And I think teams that are open to kind of retraining themselves, and that's always been, software engineering, like, new types of databases, new types of code. I think this is a more fundamental shift, but I think it's a really exciting time. I think Alloy, as coming back to that example, I think they're well positioned if they make good decisions on leveraging their customer network. The fact they already sell to banks, it's hard to sell to banks, right? So, they're trusted by those banks and they've been through, the ringer in getting those to be successful partnerships. And if you can become the trusted partner to help them through this AI age, I think that's really exciting.
Yeah. Yeah, makes sense. Let's switch gears a little bit. Maybe talk about stablecoins for a bit. Obviously, after Stripe's billion-dollar acquisition of Bridge, there's been a ton of entrepreneurial interest in the space. What sort of applications around stablecoins are you most interested in? And let's talk your thoughts on the regulatory side, especially international. I think the U.S. side has been a little bit less focused on regulation now, but I think, as we talk more about cross-border payments and things like that, I wonder how regulation is gonna play out internationally.
Yeah. Uh, Stablecoins, it's a fascinating space. It's not brand new, right? This has been cooking for a while now. This all started with the DeFi stuff, right? Like DeFi is a casino. It hasn't changed any element of financial services. It's a new market for people to to play and gamble and take risky bets and generate yield. But it is somewhat of a circular reference DeFi. Like if you go deep, where what I did, I spent like a whole more than a year, like kind of going deep in the DeFi space without making any meaningful investments outside of playing around with my PA. Um, it's a really interesting space, but it's spit out this thing that's useful, right? Stablecoins came from the need to move in and out of all those protocols and do it in a way that um, you know was stable, right?
Yeah.
So this cryptocurrency that's pegged, to actual currencies that hopefully will remain stable. Knock on wood. With what's going on in the crazy world we're living in, um, and whether it's USD or the euro. Or other currencies around the world, like the ability to have a true digital currency that can be instantaneous, trusted, and on this immutable ledger, like it's really compelling for a lot of use cases, and it's just starting to happen. I think it's a little bit overstated how far we are, because mostly it's a mechanism for people around the globe to just own US dollars.
Yeah.
And kind of there isn't a lot of demand for US dollars for hopefully remaining good reasons. Um, and that mechanism is really interesting from a kind of asset management perspective and a consumer banking perspective. I think, the promise of crypto from a real world application was mostly always around cross-border payments from my point of view. I was
Mhm.
like 11 years ago, I was excited about it for that reason. Like,
Yeah.
the early Ripple stuff and what they were trying to do and getting rid of the correspondent banking system and what Swift and all of those systems do in pretty legacy and expensive ways. I think getting rid of unnecessary drag from cross-border FX is a huge market opportunity, and I think that's what stablecoins really good for, particularly in the B2B payments world and the supply chain finance world. So that's where I think the use cases are payouts. I mean, the creator economy is a big business now, and I think payouts globally to creators and using stablecoins to allow them to just not be paid out in a currency that is volatile, but instead in a stable currency and keeping it in that financial ecosystem instead of their local ecosystem is really powerful to many millions of people. So, I do, I think the Bridge acquisition was a moment in time. Like they really are an amazing team, and I think Stripe was forward thinking and wanting to get ahead of all these opportunities, but the space is still really nascent. That's why I think you see so many entrepreneurs running to it, because I think there's a lot of greenfield there, and I think you're going to see the infrastructure ecosystem there kind of focus on specific problems and solve specific problems really well. And I think that's exciting. You and I talked about like the iceberg of payments. I think there'll be an iceberg for stablecoin payments. Like there's so many different parts of the value chain, everything from the issuers,
That's what
which
I
I
was
think
gonna say
which
too.
will
Like
become banks. Yeah.
payments is such a big industry that no one really thinks about. I think a lot of people think about Venmo and Zelle, but like there's B2B payments, there's international, there's like supply payments. And I think those specific use cases can become really big markets too.
The way I like to always think about it, it's on a horizontal line. Like you have the risk bearing entity like, and you can do this almost for any financial services industry, but mostly like I love it in payments. And like every on this side of the line is like risk and whoever is really facilitating all of the risk. And then, there's all these different pieces of the value chain. And in the middle, you have the gateways and the stripes, like, and then at the end, the applications, like, the acquirers and how people are actually finding customers. And, the vertical SaaS market has become a big conduit for that with Shopify and Toast, things out of our portfolio that are really the customer facing software that becomes the payment provider and eventually the bank to these small businesses or creators or users. There's that. I think that same value chain will play out in stablecoins. Some of the existing players will move fast enough to be key players in that ecosystem, but I think there's a race now to create it because I think it's real. And I think the regulation should come. I've heard some really interesting comments out of people at the Fed who understand this stuff who say like we got to get ahead of it because we want people relying on the USD, not other
Yeah,
currencies. And like,
exactly.
that's the right mindset. Like,
The
if
US
this is
government has
going,
every incentive to push USDC.
yeah, if this is going to happen, like, we want people owning dollars, not euros or yen. Um, so it's or of course, I'm sure the government doesn't want RMB, right? So um, it's a really interesting time. I think it's like day one, maybe not day zero, but it's still the beginning. So, and I'm not, a crypto native investor. I don't only do crypto, but I think this is, the first time where I've seen it actually changing the way other financial services work beyond just um, investment management and the value of the currency being interesting.
Yeah, a lot of the entrepreneurs I know in this space are either ex-TradFi folks that are now in crypto or crypto folks that understand the value of, traditional financial services. And I think that mesh is actually what's making stablecoins a lot more resilient and as a concept, I think.
Yeah. I'm trying to focus on the teams that are thinking about the regulatory stuff. It's going to keep changing on them, but I think it starts with thinking about KYC and AML and all the ways that TradFi does, so you can be a serious player for corporations and enterprises and partner with banks, and there are teams out there, as you said, starting to think that way.
Yeah. We're running up on time, so I have 2 more questions for you. One is looking ahead 5 to 10 years, what are you most optimistic about in this future of financial services? And any big opportunities that you think folks like entrepreneurs aren't focusing on right now that are gonna be big in the next couple of years?
What am I most optimistic about? I think I'm most optimistic about just like finally bringing the digitization to some of these like legacy industries that I keep coming back to. I mean, bank software is still super archaic, but I think there's been a generation of entrepreneurs over the last 12 to 15 years that have been pounding the message home that it's time to come into the cloud era. And I think that positions the next set of entrepreneurs um, a lot better, for what's to come. And I think you have to solve a very important pain point to get in, but I think there's going to be opportunity to build faster over the next several years, selling into the legacy industry. So I'm excited about that. And then, I think financial services is just such a great. There's so many great use cases for the recent breakthroughs with LLMs and AI because there's so many documents, there's so many conversations that happen, and I'm excited to see what happens. But cautious for this moment because I think it's going to take some time for people to get comfortable, and but kind of ready to back teams that are going to be patient. And then where people are probably not focused as much, I continue to talk about kind of the aging population in financial services. I think most ideas that come out still, especially consumer facing ideas, are catered to younger digitally native folks. And I think people are kind of sleeping on the fact that boomers are pretty digitally native now. And I think there's an opportunity for that's where the wealth is and sits. And it's going to, everyone talks about the generational transfer of wealth. And we've been talking about it for a long time, but it's really happening now. And I think there should be more entrepreneurs building for that problem space. There's a few, um, and there's some successful companies obviously that cater to that population, but I think it's just the beginning for that. So I think more entrepreneurs should be focused on that problem.
Yeah, totally agree. I think there's the big generational wealth transfer that everyone talks about, but how that's actually gonna, like, manifest and how it's actually gonna happen, I think is still very much up in the air.
Yeah. And it's not
Um
just to me, it's not just a wealth management thing. It's like everything from fraud and identity and, everything that is built for millennials and Gen Zers, like theoretically should be built in a different way for a population that's focused on different things, right? Like their social benefits and their home equity being like the only thing that they really have in our country on average. So really interesting set of problems that I think too few entrepreneurs are focused on.
Yeah, that's a great point. All right, well, last question. You're a big Knicks fan. The NBA playoffs are coming up. How do you feel about the Knicks this season in the playoffs? And who are your picks for the NBA Finals?
I think everyone's sleeping on the Knicks. If they get healthy, I think they have all the pieces. I'm very excited. I'm overly optimistic because everyone's sleeping on them. I think, obviously it's gonna be tough to get past the Celtics, but I think it's gonna happen. We'll see. Um, my prediction. is Thunder over Celtics.
Ooh, that's a good one. Yeah, Thunder looking really good this year.
Thunder over
Charles,
Celtics. Yeah.
thank you so much, for taking the time. Really appreciate it. It's been a great conversation. I feel like we can definitely talk for another hour or 2 about all this, so we'll definitely have to have you on in the future as well.
And congrats on Luca. I haven't even told you. Yeah,
Yeah,
congratulating
the
on that's
Lakers had
insane.
one
Yeah,
of the most insane trades I've ever seen. I'm also a Nets fan, so, growing
okay,
up in Jersey, so I think
that's
it balances
rough.
out.
Yeah,
Yeah. Talk to you
okay.
later. Thanks a lot.
All right.